All right, Helaine, well, good morning.
Good morning, Blane. How's it going?
Going well, going well. Yeah, super excited to be here live with you in today's the first edition of Trade of the Day Live this week here this Tuesday. Per usual, a lot of things going on in the market, and I'm really excited to be here to break it down with you. See what we're seeing in the charts. We're going to point out a couple things that traders should really have on the radar, be watching out for. Even one thing just later on today. That's not something that we typically would be looking out for, but is certainly kind of playing a factor in the markets. And then, a couple trade setups per usual that are looking pretty strong right now that we're watching closely, and we're going to show folks exactly how we'd set these up. So,
Yeah,
uh,
excited to be here. Let's jump on in.
absolutely. It looks like we have a great room here today. So, it looks like we have a lot of our regulars. So, I want to shout out Holland and James and Jim, Thomas, Brad. I see everybody in the room. So, welcome in, everybody. Super excited to have you all here. And also, just a reminder, we love to hear feedback from you all during these calls. So, if you want to post anything in the chat while we're going, please feel free. Go ahead and put a question in there, put a response in there. We love interacting with you all. So, I'm going to go ahead and pull up our charts here. Per usual, we always like to start off just looking, taking our 10,000 foot view, kind of assessing, taking a temp of the market and looking at the chart of the S&P 500 right here. So this is just looking at the past year. We can zoom in here in a minute, but again, Helaine, just right off the bat, we can see the market's still showing a lot of really strong technical signs,
Yep.
really strong price action in a, confirmed long-term uptrend. We're still continuing to trade higher, make that nice series of higher highs and higher lows, that we have over the past, 6, 7 months, coming out of those early April lows there. We did get a bit of a pullback last week, as expected. I'm going to go
Exactly.
ahead and zoom our chart in here just so we can analyze that a little bit closer. But we had been talking about, for our last several sessions, Helene, the market had got into very frothy territory, specifically speaking about the short-term technicals.
Mhm.
Our RSI reading down there was coming in with just a scorching hot 90 read, just I believe it was Monday of last week we got that. That doesn't happen very often. Of course, the index is trading above that upper Keltner channel for almost 2 weeks consecutively. We
Not
were
only
almost
does it not happen often, it doesn't stay that way for long. If you get a 90 on the RSI, you can almost bet it's coming down within the next couple trading days.
exactly right. Yeah, that's one thing, you're exactly right. Yeah, it rarely ever goes up and touches that level, but when it does, yeah, you're 100% right. You're very likely going to get some better buying opportunities in the, next couple days to come, once you get that reading. That's exactly what happened. We saw a pullback in the markets. We were saying look out for a pullback to the middle Keltner channel, possibly even slightly below there to, that prior level of resistance. And that's exactly what we got. We got a pullback down to the middle Keltner channel in Thursday's trading, traded down to there, rallied up, and we actually pointed out in the last TOD live when we sat down together, Helene, you talked about the bullish hammer that was forming on this day right here.
Yes.
This bar, this candle, and said we're gonna have to, just see how things close. But I remember when we were talking, it was setting up in that when we were live in the last TOD live, and we got that hammer pattern printed on the chart, and it worked out exactly as we would anticipate. That really
Mhm.
high probability reversal candle right there, and so we have seen some buyers come in. Clearly buyers are still of the buy the dip mentality. So that's
Definitely.
really encouraging. Still seeing that 2 steps forward, 1 step back type of trading. And we're back up, just marginally off of the all-time highs now. A little bit of hesitation in markets today, Helene.
Hmm.
I think there's definitely some things looming government shutdown potentially tonight at midnight. What
Exactly.
that could mean for some things throughout the rest of the week. But anything else you want to touch on in the charts before we kind of hop into those things that folks should kind of have on their radar?
So, Blane, I think we're good to jump in.
Awesome, perfect. So, yeah, I mean, you can see, folks, the market is essentially flat today. It's it's changed 1 point as of right now in the live trading. So you can see it's actually less than 1 point change in the S&P. So it's really it's about as flat as flat market can get.
Hmm.
I think traders are really kind of just standing back, on their heels, trying to see what are developments come out of Washington. Now, clearly, our lane is in the stock market. Our lane is in trading. We really don't like to hop over into the DC, into the political realm. That's not our place. There's plenty of places out there you can go seek out any opinions there. But unfortunately, there's sometimes when disagreements or occurrences in Washington do, melt over into the stock market and have an effect on equity markets. And when that happens, it is wise to, be mindful of that. And so, of course, tonight there is the looming threat of a government shutdown.
Hmm.
Typically, these are not big stories for the stock market. Again, we've had so many of these in the past. There's a lot of politics involved, a lot of posturing, both sides going back and forth. But typically they end up getting resolved, in the wee hours leading up, right up against the shutdown. It's impossible to say whether that's going to happen this time or not. But why this is a market story this time is obviously, if there's people that are, furloughed, laid off, that could certainly have an employment on, or, an effect on nationwide employment and the economy, but also two, a more pressing, very quick effect on the markets is that this market is very, very highly focused on rate cuts and what the Fed is going to do at its upcoming meetings. And, we have a data dependent Fed. They've made that very clear, Helaine, like we know.
Yes.
And today, just this morning, we got a very key labor report, which was good. It was the JOLTS report, showed that, job openings were actually, moderating out. They were, did not continue to fall. That was a good sign, showed that, maybe hiring is not quite as weak as people thought. But on Friday, the real key is we have the September jobs report due on Friday morning. But if the federal government is shut down, that report's coming from the BLS, it's a federal bureau. If we're unable to get that data on time as the market anticipates, well, the market doesn't like surprises. They don't like uncertainty. So, the market's been looking forward to that report because that's really a key data point for the Fed. So if we don't get that data point on time, that's how this could become a market story. And I think that's kind of why investors are a little bit, on edge. Again, of course, we're getting ready to wrap up September, getting ready to wrap up the third quarter. Today's the final day, of Q3 trading. So there's a lot of different things going on, but it makes sense why, because of all these different things going on with that context, why investors are a little hesitant today. We've gotten a nice bounce back off that pullback, but I think that's, Helaine, why we're seeing kind of a flat market today.
Yeah, I totally agree.
Yep, exactly right. Well, yeah, I think that's just about everything we want to cover in the chart here. Of course, still really liking what we're seeing in the charts. Overall,
Exactly.
great trend for the markets. Technicals look really strong. The buyers clearly came back to the market over the past few trading days, came in and bought that dip. But with that, Helene, of course, there's still plenty of opportunity out there across the market, even though, it's a flat market, kind of unexciting, just if you're just looking at just today's trading. And I know that I spotted one opportunity here. It's one stock. We actually have not traded this one too much lately.
Oh
I
yeah,
think
it's been a
we,
minute.
yeah, it's one I think that we should have been trading a little bit after seeing the chart. It's one I saw in the last couple of days, and I was like, man, Leidos is really coming back strong.
Oh
This was
yeah.
one that we traded a lot last year. It had just one heck of a run last year,
Hmm.
and we really had a lot of great trades on it, a lot of great alerts we sent out to members. But this one right here has had some just fantastic trading and trends been putting together over the past 7 months. So this of course is looking at those past 7 months of price action here for Leidos. If you're unfamiliar with this company, it's in the industrial sector, but it's really a defense company, and they're pretty broadly diversified. They make a lot of different hardware. They're also a bit in the cybersecurity and IT business and the defense industry too. So it's pretty well diversified defense company here. And of course, again, the trend that really speaks for itself. Excuse me. You can see the higher highs and higher lows it's been making over the past 7 months. You can see it just clearly on the chart. Really great technical trend line buy signal going on here too. You can see the red line. That's our 21-day EMA that I really like to track too. That's our shorter term EMA trading above that green line down here. That's our 63-day EMA. So you can see there's a clear definitive buy signal right there. They also have been widening out a little bit of late, so signaling some strengthening in that buy signal. And again, that signal's been active actually since late April. So this stock actually sold off a bit in advance of the kind of tariff tantrum and April meltdown that we experienced earlier this year. So it was actually consolidating a bit there. And that's actually when the stock started to rally along with the market coming out of that. And you can see that trend has continued ever since. And the stock, again, it's been breaking out to new shorter term higher highs recently. Just last week, it traded back down to the middle Keltner channel, consolidated a bit, and now it's clearly starting to regain its momentum, trading higher. It's trading above both of those EMAs right there. Again, we're seeing the RSI line down here spike as well. So that's, again, confirming that building of momentum. But again, it's also at current price levels, it's not overbought. You can see the stock's trading inside of the upper Keltner channel there. So
Hmm.
that's signaling that at current price levels, it's offering a really attractive entry point. And again, our RSI down here, while spiking, while trending higher, is below that level of 70. So that's offering a really attractive entry point for this one on Leidos. Now, the way I look to trade this one is they only have monthly options. So you can see they only have monthly options that are available for this stock. So I actually landed on a play for this one. I'm going to look to set up an in-the-money call option debit spread. And there's pretty decent time value for these options right here, looking out to the November 21st expiration. So, of course, the nearest monthly expiration in October 17th, it's a little close. It's really only about 17, 18 days out. So typically we like to hold some of these spreads a little bit longer. There's generally not going to be enough time value to get enough profit potential looking that short of a time frame. So that's why I bumped it out to this expiration date here,
Makes
and
sense.
specifically landed on these two here, Helaine. I was looking at the 170 strike call to buy to open, and then
Hmm.
looking to sell to open the 175 right here. You can see at the current market price, it's a little bit wider of a bid-ask spread. So I'll probably just have to bump my price up a little higher than the midpoint to get this one filled. But you can see it's coming in clearly below 4 points. So as a 5 point
Good.
spread, we would just look to get filled at 4 points or less. Just to try and guarantee that 25% profit potential. So I'm going to go ahead and set this one up right here. And even though it's coming at 3.45 right now, I'm going to bump this up to 3.65, or let's see, let's try 3.85, because that's still well within our price range right there. So I'm going to go ahead and submit my order with a limit price at that right there. And we'll just see if it gets filled. I think there's probably a pretty good chance that it will, with that, a little bit higher limit price. But again, still well within our, a range that we'd look to enter a trade like this. So that was the one I spotted for today, Helaine.
Very nice. Yeah, I love it. I love it. As you said, LDOS is a stock that we've traded a lot in the past. It's been a minute since we have actually traded it, but that resumption of that bullish trend and that clear momentum there is a no-brainer to me.
Yeah, absolutely. And just to show folks too on the chart line, this is the strike I was looking to buy to open right here. So I'm looking to buy the 170 and looking to sell the 175 right here. So, come option expiration, as long as LDOS shares are trading at or above that 175 level, you can see it's clearly pretty well in the money right here. Then this spread would be sitting on a pretty nice profit opportunity right there. So just wanted to point that out on the chart.
Really nice. And Jim in the comments had a question. He said, last week you mentioned that there was not a lot of time value in the financials. So debit spreads were not being considered. Exactly. What is a reasonable time value in an option spread, and how do you calculate that?
Oh, yeah, that's a good question. So it's kind of a couple levels there. So, you're right. We did say last week with financials, it's generally really hard to find options that are carrying a lot of time premium. So, in that case, we're referring to the individual, each individual option contract we're looking at. So in this case, for LDUS, I'm talking about the 170, 175. Those two individual options. Now, one pretty easy way that we'll calculate that is just actually looking at a trade and seeing what its
Yes,
profit potential is. So,
exactly.
you can go on a granular level and calculate the time value portion of each individual option premium. But a really easy way to do that is just looking to set up the trade and just seeing what the entry cost is. As we know, call option debit spreads, they are a defined risk and defined reward strategy. So you do have that capped profit potential, and that's going to be one based on the size of the spread, and then two, what you paid for it. So in this case, I'm looking at a 5 point spread using the 170 here and 175 strike for the spread. So just the difference between those 5 point spread. So the most that spread could ever be worth is 5 points. So because of that, that's why when Helaine and I are looking to enter a trade just like this one, we're looking to enter it at 4 points or less. So by doing that, you'd be guaranteeing that you have at least a 25% profit potential for that trade. So, with a 5 point spread, you just do the math. If you get in at 4 points or less, you're going to guarantee that mathematically. So that's a pretty good gauge just for, if you're looking for a call option debit spread, just to see what the profit potential is of the spread. If you can meet that kind of mile marker, or, maybe say you're even just looking for a slightly less, profit potential. Say 20% is okay with you.
Hmm.
If you're able to enter this spread and you can find one, using the stock's options that, meets that criteria of, having a 20% possible profit potential, then, that means it would, the options have enough time value in them. They're rich enough in time value to make that, have that trade make sense.
And just one
So
other note on that is that when we're looking at these spreads and to see if they have enough time value, we're not just looking at any random debit spread. We typically want to be selling a strike that's below the most recent low for the stock because you could trade in at the money debit spread and it would meet that 25% profit potential, but it wouldn't provide us the amount of downside protection that we typically like to see in a stock or in a debit spread. So we are going slightly in the money with that debit spread, and then we want to see that profit potential. So ideally selling a strike that's below the most recent low or near the lower Keltner channel.
Yep. Yep, exactly right. Yeah, that's, just regarding strike selection, that's a good point there. And folks, I'm sure you probably just saw I just updated my order too. I saw it was taking a second to fill, and the prices had adjusted a bit, so I actually moved that up to 4 points. So I moved it, for that 5 point spread, moved my limit up to four, and it filled almost instantly. So
Now,
got that trade on right there.
Thomas just said, this looks way in the money. Won't it close as it is above the short strike? So, yes, Thomas, that's correct. If the stock doesn't
Hmm.
move at all between now and option expiration, it would close in the money and that full profit potential would be realized. We trade
Exactly.
in the money call option debit spreads because it allows us to profit if the stock continues to move in the way we think it's going to move, which would be a bullish upward movement. If it doesn't move at all, or if it even declines in price, or if there's a market correction or whatever it may be, it gives us the downside protection and flexibility for the stock to move against us, and we can still make that money on that trade.
Exactly right. Yeah, so that's part of the strategy with these in the money debit spreads. Is giving you that flexibility of, again, like just like Helaine said, of whether the stock continues to rally, stays flat, or even sells off by just a bit. It increases the probability that that trade is going to ultimately end up becoming profitable. And I saw there was a follow-up question too regarding assignment for these in the money spreads, Helaine, too. And that, that is something that can happen. You
Hmm.
do have an assignment risk sometimes, whether it's via dividend or, just, it's in the money and, somebody might just want to, look to assign that short call. But with an in the money call debit spread, that's okay if you do have that assignment risk, if it's in the money, because the trade is covered by the long call leg of the spread. So, if the short leg call gets assigned, then, typically, at least my broker does this. You'd have to check with your own. I know each one has their own, options, trading agreement and how they handle different things like that. But, if I get assigned on the short leg of the spread, then my broker will automatically just go in and exercise my long leg of the spread. And the net difference is that it'll cancel out essentially, and you will ultimately end up realizing the full value of the spread. So if you do get assigned, then that's actually it's a good problem to have because it means the spread's going to be closed out, and the net difference between those two transactions of the assignment and the exercise, it's going to go ahead and produce you the full value of the spread. So in this case, if I got assigned on this spread, the 175 got assigned, my broker would automatically just go ahead and exercise this 170. And then, the difference between the two of those would come out to 5 points, which is the full possible value of that spread.
Yes. And then Thomas had a follow-up question. Sorry for not understanding. If the current price is above the sold side, then won't the spread close as soon as it is opened? No, that is not how that works. It it doesn't affect it at all, actually. So, with these in the money debit spreads, you open them and then you're able to hold them until the options expire. So on that option expiration date.
Yep, exactly. Yeah, often, oftentimes, I've held spreads through expiration and just allowing them to expire in the money.
Yes, but you can do as well.
Sometimes, if you are in the money, of course, having a deep in the money short call in this case with the short leg of the spread, you do run that assignment risk. So you will, sometimes see that too, heading into assignment. But again, I just kind of explained how that works. Um, But yeah, no, if it's just because it's in the money spread does not mean that it will immediately close just as soon as it's open. Oftentimes we're looking to enter these positions 1 or even sometimes 2 months out and
Mhm.
actually holding them for the majority of that time. So just to clarify that.
Okay, great. Well, I think with that, I'm going to jump into my trade now. Um, and we will keep answering some more of these questions um, after I go ahead and share my trade of the day. So my trade of the day is for NVIDIA. If
Oh, nice
you
call.
saw the news today, oops, sorry. Can you see my screen okay? Yeah.
Yes.
If you saw the news today, NVIDIA hit a new high, and this is off of some AI infrastructure deals that they announced. So, fresh record high, and this really caught my eye because NVIDIA had been consolidating here for a bit. Here's the chart, and we all know the run up that we've seen since April. Let me go ahead and zoom in for you guys a little bit closer to check out the more recent price action here. But this caught my eye because NVIDIA has been in a consolidation pattern for the last 2 months, roughly 2 months. And so we know when a stock is consolidating, it is range bound. There's an upper limit and a lower limit, and we're waiting for it to either break below the lower limit and break down or break above the upper limit and break out. And so what we saw today is we saw a fresh high from NVIDIA, and this broke out of that range. And oftentimes, once a stock breaks out of a range like that and breaks higher, it continues to trade higher from there. So this is a really, really bullish sign. And then I back this up by looking at some of the technicals that I like to look at. I personally look at the 35-day EMA as well as a 200-day simple moving average to confirm the buy signal and the bullish trend for the stock. We want to see the stock trading above both of those moving averages, but then also the 35-day EMA trading above the 200-day moving average to confirm the buy signal. We can see that this occurred back in June and since then has remained in place with the stock clearly trading above both of those moving averages. In addition to that, we look at the Keltner channel, so timer entry. We ideally want to have that stock trading below the upper Keltner channel to confirm that it's a good time to buy the stock. And we see that here today, even with that big swing up. And then RSI wise, I will say it's a little overheated, but that does not stop me from entering into a debit spread for NVIDIA because debit spreads, as we know, in the money give us downside protection. And so I am looking at the November 21st, 160, 165 strike spread. If you can see this here, the 165 is that lower limit from the previous consolidation bracket. So that gives us a lot of downside protection there if we were to see a trend reversal. But I'm going to go ahead, I'm going to take this trade. It was trading right around 4 points. Ideally, I want to get in at four under. So I'm going to set this for four. I'll let it bounce around. It might take some time, it might not. But I'm gonna go ahead and try to get in there, and it looks like it just filled. Let's double check that.
I think it
Let's,
probably did.
it looked like it did. Maybe there it is. Okay, it's
Oh,
placed
it's placed.
bouncing
It's
around. That's
yep.
okay. But I was really excited about today's movement for NVIDIA, and so I was excited to get in. Of course, if I wanted to get more potential leverage, I could do a directional call option purchase, but this is a stock that has a ton of time value,
Hmm.
which is okay. But as you know, time value decays as you close in on option expiration. So it's almost like a built-in loss, if you think about it, which is why we like to limit our time value so much. But in order to meet the 1% rule, it'd be a very expensive directional call option purchase, which is why I went that debit spread route, a lower cost trade, downside protection added in because we do see volatility within the AI sector of stocks.
Yep, absolutely. Yeah, it's nice. They're clearly the king of the AI trade. They're kind of really the
Yes.
backbone of this market too right now. Obviously they're the most heavily weighted stock in the S&P and the Nasdaq indexes. Not really a Dow component, but um, it clearly has a huge effect on the markets. It's really encouraging to see them breaking out to a new all-time high today on the
Mhm.
back of that really good news. And I love the trade, Helaine. It's you're seeing a stock is
Thanks.
this company's $4.5 trillion market cap now. It's the first one to ever reach that. They surpassed that today. And seeing a company with $4.5 trillion market cap breaking out like it is now, it's really, really encouraging. You see that, it kind of built that base, it consolidated, as you said, you
Mhm.
you clearly pointed out where some of the resistance is, or support rather, that came into play during the consolidation. You set up the trade around it. I think it's a really, really strong looking trade opportunity. So love that one right there.
Thanks, Blaine. Appreciate it.
Absolutely. Now, Helaine, I was going to go ahead and post something in the chat here now too. I know I always like to give folks an opportunity to check this out. I know we have a couple more questions to answer here in a minute, but I just put a link in the chat, everybody. It's actually to a newsletter of mine. So it's my own personal video newsletter. Put this together every single weekend. Once the markets close on Friday, I look all across the market, do a lot of research, and I go seek out the top trade opportunity and top trade idea out there that I can find that I think has the best probability of working out over the next couple weeks to come after that. And I put together a nice video breakdown. I do a lot more research. So, if you like what Helaine and I did here today, it's all that and more. I do a little bit more of a deep dive into the company, give you some additional trade management ideas about, how I would look to management with profit targets, stop losses, and, specifics on those things. So, the trades have been working out really, really quite well with those lately. Really,
Oh
really
yeah,
high win
definitely.
rate. So it's a high 90% win rate over the last several months. So my members that are currently in there have been having some great opportunities at profit in there. So if you haven't checked that out, you can actually check it out for just $1 for your first month trial. So I just put that in there. It's a great opportunity. Would love to see you all check it out if you haven't already. But so just want to put that in there to give you the opportunity. I know we love having you all here consistently in the TOD live. So just wanted to give our loyal TOD live members and frequent attendees the opportunity to check that out. And Helaine, I
Especially for
think we
just a
do.
dollar. I mean, that's a no-brainer. You can't get anything for a dollar anymore.
I know, yeah, yeah. The McDonald's dollar menu is long, long gone, but you can still sign up to get trades every week for just $1. So love to see that. Um, but yeah, I think we still have a couple questions in the chat here, Helaine. I see had a question about the dividend on LDOS. Yeah, so they had the dividend X date for LDOS was on September 15th. So that's really where the assignment risk regarding the short options comes in is around the dividend X date. So since that's already passed, that's not particularly a concern, because anybody that would have been looking to buy the stock for the dividend would have had to, buy the stock, before that date or on that date. So, that's already passed. So, there's not really a great assignment risk regarding just the dividend for LDOS. So, just to clarify that. And Thomas, you're asking about do you have to wait until November in order to profit? So, not necessarily. So, of course, the way call debit spreads, in the money call debit spreads end up profiting is they, one, remain in the money. And then over time, that time value decays away. That's how these plays work out is you're essentially playing, allowing the time value to decay out of these options. Now, of course, every single individual option, every stock's options, time value will decay away at different rates. And, typically it's, because of earnings have already passed or some, event causing some uncertainty in the stock, kind of building some of that risk premium. Once that passes, gets behind you, then you'll see that time value decay a lot faster. So, if there's even a catalyst, say that, propelled the stock a lot higher that was unexpected, those options got super deep in the money, you would see that time value decay a lot quicker that way as well. So you typically don't have to hold these all the way until option expiration in
Hmm.
order to realize, a nice return on them. In some cases you do, just again, it depends on the rate at which the time value decays out of there. But, oftentimes we'll, place one of these trades, a month or month and a half or so out. And, within, sometimes 4 weeks. But, generally around 3 weeks is you'll start seeing a lot of that possible profit potential start to be realized in the trade as long as it stays in the money. So again, you can never guarantee anything with the trade, right? We all know that there's risk in investing in the markets, but that's typically how these will look to turn out.
Exactly.
Um, let's see here. Any other questions in here, Elaine? Looks like there was a couple.
Let's see.
What
So
was the expiration date for your NVIDIA spread,
it
Helaine?
was November 21st. And then
Perfect.
Thomas said, is my profit still limited being a spread no matter when I close? Yes, that's correct. The maximum it could ever be is the width of your spread. So Blaine and I both looked at
Exactly.
5 point spreads today. The maximum that it could ever be is 5 points.
Yep, exactly. So that's just a trade-off with those debit spreads is, being a defined risk and defined reward strategy. You get the great benefit of it having the ability to profit whether the underlying stock or ETF goes up, remains flat, or even declines by a bit. But that's just the small trade-off, right? You can still have that capped possible profit potential, but trading them like Helaine and I pointed out here today, you can still, over a month or a month and a half, 2 months time, whatever it is that you're looking at, you can still set up a trade that has a really strong profit potential for that period of time, while also taking advantage of the great, advantages that those trades have, being able to profit in the, various different price change scenarios, being up, flat, or down.
And just to clarify, this is just one of our strategies that we use in conjunction with others. So we of course have,
Yep.
unlimited profit potential strategies. We have limited risk, limited return strategies. We have a bunch of different strategies, and this is one tool in our toolkit that we use.
Exactly. Yep. Yeah. It's just exactly right. It's just one of many different tools and one of different many, different trading strategies where we like to use in the markets. And, just kind of basing on today's market conditions, there is a little uncertainty,
Mhm.
kind of, I think all signs kind of point to us having a bit of a shutdown, beginning tonight at midnight, barring, some miraculous change. So if that happens, we could see a little uncertainty, a little volatility in the markets. If I had to bet, I didn't actually look this morning, but if I had to bet, the VIX is probably spiking a little bit. So, that's, indicating that, people are probably, buying up some puts, buying some protection for their portfolio. You're anticipating a little volatility. So,
Mhm.
that could prove a little bit of a headwind for, say a directional position on a day like today. But that's the perfect opportunity for these in the money call debit spreads because, one, given they have the ability to profit whether the underlying stock is up, flat, or down, like we've said. But again, remember how these trades end up profiting is because all that time value, that's where the profit potential comes from. So if you get into a market period where volatility is rising a bit, you're seeing, the expectations of volatility pick up, then that's going to translate directly to higher amounts of time value and more risk premium into those options. So if you're getting higher values, higher time value, excuse me, and that's going to translate to higher possible profit potentials for an in the money debit spread, just like we're looking at today.
Exactly. Now, sorry, Blaine, with that, I really have to go. I have a call. So I apologize,
No
everyone.
worries.
Um, but I think we might have to wrap it up now. I appreciate everyone's questions and all the interaction. But I think that is all the time that we have for today. So I know next we will be back this Thursday. So definitely be back here, same time, same place. We can't wait to chat more with you guys then. Bring all of your questions. We love, love, love them. So thank you guys so much for joining us today.
Yep, absolutely. Yep, 100%. Looking forward to seeing you back here on Thursday. Probably a lot to break down between now and then. So looking forward to that session. But until then, hope you have a great rest of your week, folks. We'll see you back here in a couple days. And thanks again so much for being here live with us in the room. Thanks so much.